problem with ESG is it's political activism. It's making decisions, investment decisions based upon funding a political agenda rather than seeking the best and highest rate of return for a certain level of risk that you're willing to take. Everyone has a fiduciary duty that's managing money. Do the best for the beneficiary or the owner. ESG undermines the basic financial principles, which are rate of return, maximizing rate of return. And investing in ESG funds does not achieve that outcome because we know most ESG funds underperform the S&P 500. Underperforming the S&P 500 means you don't really need to pay a money manager at all. We could put all of our investable dollars in the S&P 500 and outperform those funds. There's always pressures as we experience high levels of inflation, and recently the highest level of inflation that we've experienced in 4 decades. There's always pressure to do a cost of living adjustment. So these pension boards and these money managers have a responsibility to seek out the highest rate of return. I think the legislature needs to continue to empower the executive branch in this area. We need to have very clear, concise laws, but we also need to empower the executive branch, our state treasurers, our attorney generals, our governor, to enforce and to ensure the law is being met. Over the course of the last 12 years that I've been in leadership or in the House of Representatives, we've brought all pensions up to solvency levels. We only have 2 pensions now that are less than 80% funded. A tremendous accomplishment. But to ensure that there's no erosion, steer clear of ESG fund investing.